Reverse mortgages. Get the facts before cashing in the equity on your home's equity. Presented by Stephanie Vinson. Materials provided by Genesis Financial Management. Introduction. Many older Americans are turning to reverse mortgages. These allow older homeowners to convert part of their home's equity into cash without having to sell their homes or take on additional monthly bills. You will understand what reverse mortgages are, how they work, how much you can borrow, costs associated, the restrictions and requirements, and the repayment process. How do reverse mortgages work? Homeowners who are 62 and older who have paid off their mortgages or have only a small remaining balance are eligible to participate in HUD's reverse mortgage. The program allows homeowners to borrow against the equity in their house. How much can you borrow? The maximum amount you can receive will be determined by factors including age, the interest rate at the time you close, the equity in the home. There are no limits on the value of homes qualifying for a HUD reverse mortgage. However, the amount that can be borrowed may be capped by the maximum FHA loan limit for each city and county and can vary from $172,632 in rural areas to $312,895 in major metropolitan areas, depending on local housing costs. The older you are, the more cash you can get. The more your home's worth, the more cash you can get. There are no assets or income limitations on borrowers who receive a HUD reverse mortgage, and you don't need to have great credit. How are the funds available? Line of credit. You make withdrawals whenever you choose in whatever amount you've chosen, up to a maximum principal amount. Lump sum. Take all or any part of the loan at any time you choose. Combination. With certain limits, you may combine the lump sum or 10-year option with the line of credit. Associated costs. The costs associated with getting a reverse mortgage are similar to those with getting a conventional mortgage. Origination fees, appraisal fees, inspection fees, title policy fees, mortgage insurance, and other normal closing costs are assessed but can be financed in part of the mortgage. You will also have to pay for mandatory mortgage insurance. HUD's reverse mortgage program collects funds from insurance premiums charged to borrowers. Senior citizens are charged 2% of the home's value as an upfront payment plus 1.5% on the loan balance each year. These amounts are usually paid by the lender and charged to the borrower's principal balance. Why mortgage insurance? Mortgage insurance guarantees that you will be able to continue to receive your loan proceeds even if your lender goes bankrupt. It also guarantees to lenders that they will get their money back even if you outlive the estimated life of the loan or your property value decreases. Restrictions. There are no restrictions on how you can use the loan, so it's up to you. The proceeds of a reverse mortgage can be used for anything: daily living expenses, home repairs, home improvement, medical bills, prescription drugs, paying off existing debts, education, travel, etc. But you must first meet with an independent reverse mortgage counselor before applying for a reverse mortgage. The counseling session is at no cost to the borrower and can be done in person or over the phone. The counselor's job is to educate you about reverse mortgages and inform you about the alternative options available to you given your situation and assist you in determining which particular reverse mortgage product would best fit your needs if you elect to reverse a mortgage. Finding a counselor. Contact the AARP's Foundation's Reverse Mortgage Education Project. Phone number is 800-209-8085, or you can go online at aarp.org/REVMORT. Repayment. Reverse mortgages are designed to limit the burden on making monthly mortgage payments. Unlike ordinary home equity loans, a HUD reverse mortgage does not require repayment as long as the borrower lives in the home as their primary residence. Lenders recover their principal plus interest when the home is sold or refinanced by the owner's heirs. If the home is sold, the remaining value of the home goes to the homeowner or to his or her survivors. If the sales proceeds are insufficient to pay the amount owed, HUD will pay the lender the amount of the shortfall. The Federal Housing Administration, which is part of HUD, collects an insurance premium from all borrowers to provide this coverage. If you are concerned about leaving a legacy for your children in the form of home equity, make sure that you can understand how a reverse mortgage could impact that. When the loan comes due, the bill is for what you borrowed plus fees and interest. Interest rates on reverse mortgages are not fixed. In summary, all in all, there are many benefits to taking a reverse mortgage. As long as you are 62 or older and own your home or have at least a small balance, for the most part, reverse mortgages work in your favor. Just be sure to meet with a good counselor and make sure you know what you're getting yourself into. Questions, comments, experiences? For more information on dealing with debt or to make an appointment with an accredited counselor, you may call us at 877-202-9246 or visit us at www.yourgfm.org.